So hello everyone, welcome to the basic technical analysis series episode 3. In this video we are going to see about 4 topics. The first one is time frames and the other 3 are candlestick patterns that are potentially reversal candlestick patterns. But before that, make sure you are subscribed to the channel, you are liking this video and sharing it with your friends, and also please make sure you are joining our Telegram channel where we are posting instant news updates and also potential breakout stocks and reversal stocks. So without any further delay, let's get started. So the first topic we are going to cover is time frames. So let me take this Infosys chart as an example. Currently the chart is in daily time frame, which means each candle represents one day. I'll zoom it. This particular candle is representing 4th of February. You can see the date and down. This particular candle is representing 4th of February's price movements. That is, it has opened here, it has touched the low of this place, and then it has made a high of this place, and then it has closed around here. But there are different types of time frames where we can analyze in depth. So I'll start from the lower time frame and then move up to the higher. So let me start off with 5 minutes time frame. See, the day has started here at around 9:15. As you all know, the market opens at 9:15. So the day has started here, and each of this candle is representing the price movements for each 5 minutes. So this is 9:15's candle, this is 9:20's candle, and then this is 9:30's candle, 9:25's candle. So all these candles are representing 5 minutes. So basically we are using a set of time frames which are used by the whole world. So those time frames are 5 minutes, 15 minutes, 1 hour, 4 hour, daily, weekly and monthly. These are representing 5-minute candles. So how does a 15 minutes candle looks like? As you can see, 9:15, 9:20 and 9:25 candle, both these 3 candles combined, the 15 minutes candle will look like. For example, I have just drawn a box connecting the first 3 candles, that is 9:15, 9:20 and 9:25. I'll switch it to 15 minutes time frame. As you can see, it has covered up only one candle representing the 15 minutes time frame. So let me now cover 4 candles. As you can see, I have covered 4 candles here. So I'll now switch it to 1 hour time frame. Again, it has covered only one candle representing that it is the price movement in 1 hour. So this kind of long candle has been formed in the first 1 hour of 4th of February. So now again I'll extend to 4 candles, 1, 2, 3 and already one is here. So this 4 candles is going to represent the 4 hour time frame candle. So I'll switch it to 4 hour time frame. Again, as you can see, it is representing only one candle. So this is the price movement for first 4 hours of Infosys on 4th of February. As you can see, in the 5 minutes candle, it has been started in a bearish trend. So it has fall down like anything, and then it has got a good movement in the up, and then it fall down, and then it again got up, and then it was in the sideways direction, and then it rose up some, and then it came back. So these kind of price movements are there in the 5 minutes time frame. If you switch it to daily time frame, you can't find that. You can just know where it has started, where it has ended, what was the high, what was the low. But if you switch it to lower time frames like 1 hour, 5 minutes or 15 minutes, you can see the price movements from where to where, why, how, everything. So now we are in 4 hours time frame. This box I'll extend to the next candle also, which is the last candle for the day in the 4 hours time frame. Our market is taking place only for 6 hours 15 minutes, so there can be only 2 4 hours candle, first candle representing 4 hours and the second candle represent only 2 hours 15 minutes. So if I join these two and I'll switch it to daily time frame, you can see it is representing only the daily candle. So if you switch it to weekly time frame, one candle is going to represent the whole week's movement, and if you switch it to month, this particular last candle is representing as the price movements in the whole February month till now. So hope you are clear with the time frames. Why I am explaining this much is in the next upcoming videos we are going to plan the entry for the stocks, or we are going to plan the exit for the stocks. Those everything are going to be based on the time frames. So now let's move on to the next topic, hammer pattern. So a hammer pattern is nothing but a candlestick which is looking very bullish, which means, as you can see, in a green candle or a red candle, the opening price is around here. It has closed above, but before closing here, it has traveled a long time to this low. So again from this low, it has recovered beautifully from here, and then it crossed the opening price, and then it closed above the opening price in this range. So there can be a small wick here also, which means this is the high. Whether it is there or not, this is a good bullish candle. Why? Because it has opened here and it has fallen down drastically. The sellers have made the fall very nasty, but then again buyers came in and then they eradicated all the sellers here, and then they rose up beautifully up to the high, which means the sellers have been eliminated and the buyers have came in. But here in red candle, the sellers are not fully eradicated, but still there are some sellers of this region alone is pending, which still is valid because we have eliminated this much of sellers. So if you are planning to invest 1 lakh based on this green candle, you can invest 100%. But when you have this kind of red color hammer, you can invest only 50%, because the green hammer candle is more bullish than the red hammer candle. So where should we find this hammer? Hammers are bullish anywhere it forms, but still if there is a steep downtrend and then there is a hammer pattern forming, it may reverse from there. So you have to wait for a hammer pattern at the right place. Whether it is a green hammer pattern or a red hammer pattern, if it is forming after a good downfall, you can enter from there. So consider this is the body of hammer pattern, and then there is a small wick. You can either enter at this price itself or after crossing this high, whichever is your wish. The hammer pattern is more valid when there is a downtrend before the hammer pattern and the next immediate candle of the hammer pattern is a green one. Whether this hammer pattern is green or not, if there is a green candle after the hammer pattern, the trend is going to reverse from there, and you can have a buy either at this position, or if you are confident enough, you can buy here itself. So let us see now live examples of hammer pattern. So this is the chart of HDFC in daily time frame, and as you can see, I have already marked the hammer pattern. So I'll just try to zoom it in. If you notice, there was a small downtrend in the pattern from here, and then we have seen a hammer pattern here. So if you have an entry here, it has moved in the upper direction very beautifully, and it has made a profit of about if I'm not wrong around 18%, which is a good profit. So the next example is Tata Power. So as you can see, this is a hammer pattern. It has been formed, and there was a 2-day downfall there, and this is kind of a doji pattern which I am going to cover in the next part of the video. After this hammer pattern, there is a steep rise in the price, and as you can see, if you would have entered here, you would have made 100%, around 100%, which is 98%. So this is the power of hammer pattern. Once it is formed, it is going to have a bullish turn, but you have to wait for the right place and the right time. The next example is Tata Motors. I have marked 2 hammer patterns, both are valid, but still I will consider this hammer pattern because the body is bigger than this. So if you would have made an entry here, the return should be around 75%. See, 20%, 98% and 75%, it is not easy returns in stock market. So if you find this hammer pattern anywhere after a downtrend, please do make sure that you are making use of it, And if you have any other doubts regarding hammer pattern or any other pattern also, please leave a comment. So the next topic we are going to cover is bullish engulfing. See, bullish engulfing is a two candlestick pattern where two candlesticks should be involved. So the first candlestick should be a red candle, that is, it should have opened above and then closed below. Consider there is a red candle and then the second candle should open either below the low or below the close of the previous candle, and then it should rise up like anything that it engulfs all of the body of the candle. So as you can see here, it has opened below this body and then it has rose up like anything and then it has closed above the body. So this particular candlestick has engulfed whole of this kind of candle is called bullish engulfing. Remember again, there should be a red candle at first, the second candle should be a green candle, and the body of second candle should engulf whole of the previous red candle. This is called as bullish engulfing. Okay, now where to find bullish engulfing? Same as hammer pattern. There is a downtrend and here it is a red candle and then there is a good green engulfing candle is formed. This is a potential reversal signal. So if you are finding any engulfing pattern after a downtrend, you can enter there. You can either enter here or after it is crossing this high. Consider this is the engulfing, that is the second candle. You can either at this point or after crossing this point. So let us check now the live example. I have taken Canfin Homes for the example. As you can see, I have marked the bullish engulfing pattern. This is a red candle and then this is a bullish engulfing candle. So this candle has engulfed the previous candle, which means there is going to be a potential reversal after a downtrend. So as you can see, though this candle is not that good, it has moved up from there also. So it has made a profit of about 11%, which is a good return. So the next example is Marico. I have missed the yesterday's video because of my personal reasons, and I want to mention this to you all. Marico kind of formed an engulfing pattern near the support zone yesterday. There can be a potential reversal from here, and as you can see, from October the stock was in a downtrend, and this is a good signal for reversal, that too in a support zone. So we may have a good chance to make profit here. So the next candlestick pattern is Doji pattern. Doji pattern is nothing but whether this is a green candle or a red candle, the open and close will be too close. See, for a green candle, this is the open and this is the close. So both are very near. For a red candle, this is the open and this is the close. Both are very near. So any candle that is forming a simple single line or with very small body is called as Doji candle. So there are several types of dojis available. I'll take the most used and most commonly formed patterns. So the first one is normal doji, what I have said. The opening and close will be very much equal, and it would have had a movement in the upside and also in the downside. And then there is a dragonfly doji, and then there is a dragonfly doji which is bullish. The opening is here, the closing is here, but before closing here it would have made a good low of here and then it bounced back again to here. So this is same as hammer pattern where the sellers came in fast but the buyers eradicated the sellers and then finished higher. So this is a bullish candle. So the next one is a gravestone doji, which is kind of bearish because this is exactly opposite of the dragonfly doji. The opening is here, the close is here, but still it has made a high, which means the buyers have bought in very beautifully. It has made a good high and then the sellers came in and eradicated the buyers. So the sellers won here and closed below the opening price or near the opening price. So this is a bearish candle. And then there is a long legged doji. There is not a much difference between doji and long legged doji because the price movements of the stock may be higher. For example, if the opening and close is 99 and 100 around here, the high may be around 110 and 90 here. But here the same opening price of 99 and 100 may be 125 may be the high and 75 may be the low. The price movement here would have been more volatile and in the higher range also. So this is called as long legged doji. All these four kind of doji patterns are reversal patterns based on where it is forming. If it is forming after a downtrend, this doji, long leg doji and dragonfly doji are good potential reversals for a uptrend. And if it is forming after a good uptrend, doji, greystone doji and long leg doji are good potential patterns for downtrend. So let us now check live examples. So I have taken Nifty for the first example. You can see many doji patterns here based on where it is formed. So if you see, I have marked this is a doji pattern. It has formed after a good downfall, and then after this doji pattern is formed, it has increased. But still, this kind of doji patterns is not that much valid because it was not in a steep downtrend and it was in kind of a sideways pattern. So we may not consider this doji pattern, and there are many other doji patterns in Nifty also. Please do make sure that you are checking that, and please comment where and which time frame you found the doji patterns. So the next example is in Bank Nifty. As you can see, there was a good rise in Bank Nifty and then a doji candle is formed and then there was a steep fall. So this is a bearish reversal of doji pattern. The next example is for ONGC. See, there was a small downtrend of 2 days and then there is a good doji pattern and then it rose up like anything to this point. The returns maybe should be around 50%. So the next example is Hindustan Unilever, where we are going to discuss about gravestone doji. There was a good uptrend and then there is a good gravestone doji is formed and then there was a steep fall from there. So that's it for the video, guys. We have covered up 4 topics today, and in the next video we can cover about the opposite of what we have discussed today. For hammer pattern it is going to be an inverted hammer, and for bullish engulfing it is going to be bearish engulfing. So please do make sure that you are subscribed to the channel and you are liking this video and sharing it with your friends. Also join our Telegram channel where we are posting instant news updates and breakout stocks and potential reversal stocks. Thank you.